Hello and welcome to Business Standards' very special episode. I'm Shreya Nandi, and today we are speaking with Dr. Raghuram Rajan, who is the professor of finance at University of Chicago Booth School of Business. Dr. Rajan was also the former governor of the Reserve Bank of India and chief economist at the IMF. Dr. Rajan, thank you so much for joining us. I would first like to get your perspective on the geopolitical shifts, trade wars, and the broader disruptions in global trade. Countries, including India, are either negotiating trade deals with the US or are bracing for potential tariff increases. How do you see these developments affecting global trade, and what are the potential gains for the US?
There is obviously going to be some disruption in global trade. What we are seeing is every country seems to be negotiating a special package. It's not uniform. And that too creates some concern because, a more efficient producer of some particular good is going to find that it is being tariffed at a higher rate. So, the supply chain moves to a less efficient but lower tariffed entity. There's also going to be some attempt at transshipment. That is, the entity, let's take, say, for example, China, which has high tariffs imposed on it by the US, may try and ship to Mexico to come under the radar screen and avoid the tariff. Now, to prevent that, there will be a lot of inspection. What was the value added in Mexico relative to the value added in China? A lot of uncertainty about what passes muster as a Mexican product rather than a Chinese product. So there is going to be some realignment of supply chains as a result. And of course, for the US consumer, the cost of many of these products is going to go up because, yes, the American president says they will pay the foreign producer will pay the tariff. But we know that in practice, what happens is the cost of the tariff is borne both by the producer to some extent, but also the consumer as well as the importer who's bringing it into the country. And the relative share depends on how competitive the industry is. If the industry is already very competitive and it's cut prices to the bone, it has no option but to raise prices. And that will have to be paid by the final consumer. So all this has to play out fully. We're already seeing in the US some prices are rising. And the more prices rise, the lower the budget the US consumer has to buy all that they want. And that means they will shrink their spending, and that will affect US demand also. Now, again, it's very early days. Everybody has been predicting these effects, but we haven't seen either the goods price inflation seriously. You're starting to see some signs of it, as well as the slowing demand, which would be reflected in, for example, companies laying off people because they see demand falling off. Uh, Most economists believe, including me, believe that it will be a matter of time. But of course, there's a lot else going on in the global economy. For example, the stock market in the US is at all-time highs, and that tends to increase sentiment. I don't think it can compensate for the fall off in demand. It can help a little bit, but that explains a little why some of the adverse effects are more delayed. But broadly, slowing in the second half in the US and some rise in prices, which makes it harder for the Fed to cut interest rates sharply.
Right. Uh, so, say for instance, from India's point of view, do you think India is on the right path to tackle this disruption?
Well, it's unclear, right? It's not clear what the state of negotiations is. It does seem that what emerges from these kinds of negotiations is sort of a broad intent. Here is the, here is the kind of tariff structure you would be subject to. Of course, the details have to be negotiated, including, for example, what happens in pharmaceuticals, where there's a separate Section 232 investigation going on from the US. But what is the broad tariff structure India will be subject to? But also, the details matter. What kind of agreements does India enter? For example, on FDI, for example, on the kind of non-tariff barriers that it imposes. Uh, it could be a relatively beneficial situation for India if A, it manages to negotiate lower tariffs than some of its competitors, and second, that it brings down its own tariffs in a number of areas where they've been creeping up, allowing for more competition within India for the consumers, Indian consumer. And that can be very beneficial for the Indian consumer, but also competition can be very beneficial in some areas for Indian producers, putting some pressure on them to do a better job than they've been doing so far. So, we can convert this into something which is a little more win-win rather than lose-lose. But I also think that it's important for India to think about areas where it wants the US to move. For example, when we're selling services in a big way to the United States, is it possible that some of the barriers to entry for our services are brought down? For example, on the medical side, degree requirements. Can we find ways that some of our highly qualified doctors can satisfy those degree requirements and provide service at a distance? Can we find ways that medical tourism can be enhanced, for example, by the US allowing Medicare and Medicaid to pay for some of the operations done in India? We have excellent eye doctors, for example. It would be cheap for them to provide that service, but also you could do that and have somebody fly over to India, get the operation, and go back to the US at a cheaper rate than it would cost the US to provide that service. So we can be far more innovative in what we ask the US. Given that this is a package deal, why not do it?
But you also mentioned that there could be certain areas in certain sectors where there should be some sort of a reduction in tariff as far as India is concerned. So could you give us an example of what could those sectors be?
Well, I think the focus of the US administration is very much on cars. Cars is the macho industry that every country, wants its own industry to flourish. And in the US, they look at the tariffs that India imposes on US imported cars and says, look, we don't tariff you as much when you come into the US. Why are you putting such high tariffs? So that's an example of an industry where the US would want tariffs to be lower. And broadly speaking, there's no reason our car industry is not an infant industry anymore. There's no reason why we can't bring down car tariffs significantly across the board and subject our car industry to more competition.
Right. But since you also mentioned the opportunities for India and how can India make the most out of this trade deal, do you also think that what are the areas where you think that India should be more cautious as far as negotiating a deal with US is concerned?
Well, I think first on the opportunity, I think yes, we certainly should work hard as we have on improving our infrastructure, on reducing the impediments to doing business. Now we have an opportunity to also credibly announce that we will treat foreign investors, FDI, on the same playing field as Indian investors, that we will not discriminate against them, and even maybe set up our own structures to commit to doing so, because I think this is the way to attract foreign direct investment. And some of the southern states have been rolling out the red carpet to get a lot of investment in. I think any investment, whether in manufacturing or services, is beneficial to India. And this is an opportunity as companies are looking at their supply chains and rethinking it in the light of tariffs. If we can send the signal that we are open to these kinds of investments in a big way, we may attract some of this. And then, even if it's just they're thinking initially because of the US market, they may think of the global market and produce via India for that. So I think this is an opportunity. Any kind of disruption is also an opportunity. And this is an opportunity for Indian business to be more bold, more aggressive, and Indian states to also join hands with Indian business and saying, we would like more investment here, but also we can be part of your global supply chain. Um, Obviously, there are areas where I think we're more vulnerable, and I mentioned cars where we have a good domestic industry, which is also exporting across the world. That can stand up to competition. I'm not as worried about the cars and may benefit from new technologies being brought in. But I think that I do worry that some of our small producers, especially in areas like dairy, certain forms of agriculture, could be, subject to global competition, which need not necessarily be fair if the other side is subsidizing in a big way, and everybody subsidizes agriculture. So, until we have a full recognition of all the subsidies that everybody is providing, and even so, because our producers are subscale, typically small farmers, small dairy producers, um, it's something that we need to be very, very sensitive to while deciding global agreements. And there I would try and look for win-win situations. Are there ways that we can work with the US while not exposing some of our small producers to a whole lot of competition? And I've mentioned in other fora the possibility that we invite FDI in some of the value-added areas, um, agri-industry. Maybe places there we can offer some sort of concessions to the US, but which can be again very beneficial to India. But those are the areas where I would be a little more careful while trying to focus on areas where our industry is relatively strong and can hold its own.
You mentioned foreign direct investment, but if we look at the FDI numbers, India's FDI numbers, there has been a decline in net FDI, and at the same time, there has been an increase in disinvestment and repatriation. So, what do you think of this trend, and what could be the main reason behind this?
I worry about it because, earlier we used to say the big problem for India is the logistics, is the infrastructure. We're not matching that in the rest of the world. I think, it is without question that over the last few years, we've improved the logistics, we've improved the infrastructure considerably across the country. Power, for example, is much more widely available. So, given all that, we have to do some soul searching. Why is foreign investment not coming in? And the old answers no longer satisfy so much. So I think part of what is what may be at play is that we need to also think about the soft infrastructure we have. What kind of business environment do they expect? What kind of certainty do they expect about taxes? Some of our past tax claims have created a lot of anxiety, not just in domestic business, but in foreign business that, they can come and claim something way down the line and then we're stuck for years in court. I mean, I have heard government officials also talk about this as a problem. They need to solve it because it's very easy for the tax authorities to levy claims and then say it'll get settled in the courts because nobody wants to take the responsibility of writing off a large claim and then finding there's a commission of inquiry against them because there's an accusation of corruption, etc. We need to find a way to ensure that every claim is not litigated right until the end, no matter how peripheral and how nonsensical the claim might be. So I think government understands this, but it needs to act to ensure not just on the tax issues, but also on the regulatory side. Suddenly certain regulations are brought in to favor domestic producers, hurting foreign direct investment. That kind of uncertainty should be diminished as far as possible. And of course, we have to work on skilling our own people so that the workers that they have access to are good. I think that if we work on all these fronts, but also engage foreign direct investment, like some states are doing, right? They are setting up separate departments. Tamil Nadu has this entity called Guidance, which tries to bring in foreign investors, smoothing the path for them, helping them deal with some of the roadblocks that typically investors face. If we can do this, not just for foreign investors, but even for our own domestic investors, I think that will be really beneficial for the country. So again, see this as an opportune movement and do what it takes, and see the FDI numbers as a mark of whether we're succeeding. That number should go up.
Right. But do you think that lifting Chinese, restrictions on Chinese investments can also boost FDI? And do you think it is the right time to take that step?
I think, of course, the issue with China is a very complicated issue. We have had a number of border conflicts with them, and that also needs to be taken into account. Uh, I think so long as we're not overly dependent in any industry on Chinese production, especially if that Chinese production is in India rather than outside. It's better that it be in India than it be outside. So, to the extent that Chinese production we are going to, need, and of course, China is in many ways the workshop to the world. Better that they bring that production into India. Better that they bring that know-how into India, and better that Indians learn from that. In some areas, the Chinese are certainly at the frontiers of technology. Take, for example, batteries, take EVs. If we can learn from some of that, then I think that would be really good for our own industry, for our own capabilities. So what is important is yes, do invite Chinese FDI in a reasonable way, treat them fairly, but also keep tabs on it so that you don't become overly dependent in any way, both on imports but also on domestic production. That there is also more scope for joint ventures, and that is something that we should explore more. That is, can we sort of bring in Chinese production and joint ventures so that they do benefit from the domestic market, but we have a sense of confidence that our own Indian producers are learning some along the way. Again, it has to be that these are genuine joint ventures, not fronts. But we should try a range of possibilities. I think it is a shame that the world's second largest economy is at our doorstep. But if we limit ties to it and we don't learn from it, that would be a problem. Uh, you know, I think we need somewhere in between being totally untrusting to being totally trusting, and that golden mean we need to find with some experimentation.
Right. And further talking about a bit more about investment, you have been a critic of the production linked incentive scheme. Uh, while government has been saying that it has been, getting able, the scheme has been able to, attract investment, but somehow there have been implementation related challenges. There has been some delay in dispersal of subsidies. Uh, while the government calls it success, it's a success for most of the sectors. What do you think? Do you think there's a need for some sort of a course correction here, and what's the real picture here to, go ahead with the scheme?
I think the answer is none of us knows. I'm not even sure the government knows, because the way the statistics are trotted out, we have no idea what the starting point is, what the additionality is, what the cost of it was. Uh, what would be ideal for every government scheme in the country is transparency. Here are the numbers, and you go work them out and see what makes sense, what doesn't. Every once in a while, there's some announcement of numbers, and we have no idea what they are. I am a believer that especially for large government schemes, we should have an evaluation process also. Does it work? Do what was advertised when we started the scheme, and what exactly has happened, in terms of value addition for the country. So I can't answer this question. Is it successful? Is it not? Because I have no idea what the data actually say. There's no clean study. And clean study, I mean, have an independent academic institution look at what the numbers say and make it available to everyone. So you don't have just your favorite economists running the numbers and telling you the answer that you want. Um, but look, I'm sort of open to the idea that maybe some investment encouraged in certain areas may create some feedback effects, which creates more investment, etc. I do worry that, for example, in cell phones, some of the biggest investment is coming from Apple, which has really a need to diversify outside of China. So is this a PLI scheme or is it China plus one that is at work here? We don't know. I mean, I love the fact that Apple is producing more, but as you well know, a lot of it is still assembly, and it hasn't gone beyond assembly. It's trying, and apparently there are more efforts in this direction. But again, it would be nice to know what is actually working. Do we really need the subsidies for it? Or do we need to make doing business in India easier? And Apple would come anyway, given the large Indian market, as well as the need to diversify away from China. So, to really, nobody is going to turn down a subsidy. But do we need it? And is it produce? Is it creating what we want? I think that we need to study better. That said, I mean, I'm all for bringing whatever manufacturing jobs we can to this country, but I think we have to be really careful that what we absolutely need is a self-sustaining process. Subsidies can temporarily be useful, longer term they won't, because you can't keep subsidizing your way to production.
Right. And talking about jobs, recently a major IT company announced that it plans to lay off 12,000 employees, and in an era of AI-led transformation. And if I may connect this with what you had earlier said, that India should focus more towards value-added, high-value manufacturing. So, in this entire era of AI revolution, what do you think should be India's way forward? What steps should it take? And what is the future of it?
So uh, I think that we need a multi-pronged strategy, right? For sure, at the higher end, we need to increase the skill base of our population, have more creative sort of people who can sort of benefit from AI rather than get substituted by AI. The lower end of programming is going to be substituted by AI, has already been substituted by AI. There's a lot of AI sort of programs. Let me put it this way: there are AI platforms which allow you to pick big chunks of code to do what you want. So now you have to be the clever person who brings all that together in a package that you design to perform the task that you need. And that requires a higher order skills than writing those programs. Those programs are now being sort of AI'd away. Uh, so in every area, whether it's consulting, whether it's accounting, all these areas where we are now providing more services to the world, we need to constantly ensure that we are on top of AI, that we know how to use AI, but we're also one step ahead in terms of having the skills to bring it together in a creative way. So I don't think that we'll substitute the human entirely, but the human will have to be on their toes, which is that is they will have to know how to use all these and use them for some time to come. I think that could help in expanding the role of those services. At the same time, those services aren't going to create the jobs that we need, which is mass job creation. We need to focus also on much more moderately skilled jobs, which are not going to be substituted by AI for the foreseeable future. Plumbing, carpentry, construction. Construction is a big area where India has tremendous needs. These are places where if we can upskill our workers, more masons, more carpenters of higher quality, I think the growing urbanization of India will create many, many jobs for all these people. There are also, very job-intensive industries like tourism. If we can attract many more tourists into India, which will happen if we can improve the tourist infrastructure, hotels in smaller places, access to smaller places, airports, attractive railway stations. Those are the ways we will enhance our those kinds of jobs. And then the third would be, manufacturing, agri-industry, all places where we can create more jobs, but we don't necessarily need to be the exporter to the world in each of those areas because we have a large domestic market also. So I would try for jobs everywhere we can get them, but I would recognize there is a job sort of deficit in India today. And we need to work very hard on multiple fronts, both at the higher end, but also at the moderate and lower end to create the skill base to generate the jobs that we absolutely need.
I would also like to get back to the point that you made on tariff liberalization. So, going back to tariff liberalization, India, UK recently signed a trade agreement. And in that, as a part of the deal, India's average tariff will go down to 3% once the trade deal kicks in. Do you think that this should be the broader, this kind of liberalization should be the way ahead for India as a country as such, and not just be restricted to treaty?
Well, I do think that some of our greatest sense of success and expansion was when we opened up the economy in the late 1990s and early 2000s. And it was under multiple regimes. It was in the series of regimes that came after the Narasimha Rao government, coalition governments, and it came under the NDA of Prime Minister Vajpayee. That was a time when Indian industry was subject to much more competition, but also felt a sense of confidence that it could compete with the rest of the world. So I think, again, while being careful, the direction of travel has to be to not just increase tariffs as we've seen in the last few years, but actually bring them down to subject our industry to more competition, but in a sense, allowing them to participate more in the globe, in global supply chains, etc. This is a much more difficult time to do it than the early 2000s because the world, there's a sense that the world is closing up. But I think this is a time when, if you become part of supply chains, if you can assure countries, they will also have foreign producers, they'll have access to, growing Indian markets. We have a 4 trillion plus, economy. And so I think that this could be, a beneficial move for us. I would say, therefore, don't restrict your tariff reductions just to the U.S. Work on making it available to everyone. That way, you're not hostage just to U.S. Sort of exports to India. You've opened up to everyone else. And as we said earlier in the program, also explore how you can benefit from being next to the second largest economy in the world. You know, being diversified can be a source of national strength also. Now that every country wants to exert its nationalism, being diversified across countries can be quite helpful.
Right. Dr. Rajan, I also wanted to get your perspective on the state of the economy. So, policymakers in India are currently saying that private players are not investing enough. So, what could be the possible reason for this, and what can the government do anything to kind of woo more investment?
Well, this is an old puzzle. I mean, I remember in 2014, 15, when I was in the RBI, we wondered about why private investment was picking up. Now it's 10 years later, and still we don't see private investment picking up. And it hasn't really picked up over this whole period. I mean, one argument is investors are getting far more efficient and able to do more with the same capital that they had. Maybe, how do we grow at 6% a year without significant additional investment? But it may also be that they just underconfident. They worry in the same way as foreign investors. The same reason that foreign investment is not coming. They worry about changes in policy, changes in tariff structures. From the infrastructure perspective, they should be investing more, given the tremendous increase in spending, as you said, government spending on infrastructure, both at the state and the national level. So this is a puzzle. And they make promises, we will invest every time investment is coming next quarter, next year. But when you look at the numbers, it doesn't show this generalized increase in investment. Maybe, with the uncertainty coming down, once this tariff structure is renegotiated, it might make sense for the government to try and create more credibility about both the rules of the game as well as the tariff structures going forward, and urge industry to invest more. But unfortunately, uh, I don't see sort of I don't see any silver bullet here. But I think, given all that, liberalizing, to the extent possible, and making doing business, focusing constantly on simplifying doing business in India, and encouraging more small and medium industries to come up, all of which can help in perhaps increasing the level of investment. But yeah, I don't think there's any button that I think is obvious to push at this point.
We are seeing a rise in agriculture loans. Do you think NPAs and agriculture loans are a ticking time bomb?
I haven't studied this, so I think we're reaching the limits of what I know. Um, I do think that NPAs don't necessarily stay down once you've brought them down. As you bring them down, the risk tolerance of lenders goes up. Their search for new areas to lend to goes up. And so sometimes they make the old mistakes, but sometimes they make new ones. And this is the history of lending, right? You made bad loans to infrastructure projects, you cut back on infrastructure, and your NPS came down, but then you start making retail loans, which you don't have as much sort of knowledge and experience with. And then you overlend to retail, and then you find that those loans start going bad. So, I mean, The reality is we need eternal vigilance on the quality of lending, and risk management has to be a constant process. I think you're seeing some concerns in NBFCs, in some of the banks on NPAs going up, not just to agriculture, but to other areas also. And I think we can't afford to reduce our vigilance here. Uh, but it's one of those where I think you need to understand where it's coming from and why it's coming before acting with a heavy hand, because we also don't want to constrain growth significantly, and credit is a part of growth. But I would I would think the RBI is certainly looking at this very carefully.
And Dr. Rajan, my last question would be, uh, as a former RBI governor, what is your view on cryptocurrency? We've seen US come up, passing a legislation on crypto, but as far as India is concerned, there is no clarity in its stance on what is it, how whether it should be implemented, whether it should be legal or not. So there is no recognition of crypto. So what do you think? What's your
I,
view?
I think the use case for cryptos, the socially useful use case, is still up in the air. Um, I can see countries with a iffy currency, a currency that the local people don't trust, where cryptos, stable coins are replacing that currency. India doesn't have that problem. Fortunately, the rupee is a trusted currency, both domestically and increasingly internationally, now that we have managed to contain inflation at a reasonable level. So, given all that, using cryptos or stable coins as a substitute for the currency because you don't trust the domestic fiat currency, that's not an issue in India. Um, the There is legitimate worry that in the absence of a use case, a lot of cryptos are form the basis of speculative asset. We see the price go up. We think it'll go up indefinitely, and people buy into it. Often youth with modest means, sometimes borrowing to invest in those assets. So that becomes a source of worry, a source of what if they lose their money? And it's certainly maybe they don't have the financial sophistication or even the actual risk tolerance to do that kind of investment. So I think being cautious is not a bad thing. That said, I think there are genuinely interesting technologies emerging in these areas which facilitate transactions. And I think with the stablecoin bill that the U.S. has passed, I mean, you can argue about the details and whether it's fully appropriate, and it has to over time be revisited in the light of experience. But it does allow for the possibility of greater transactions using crypto media. Now, this is different from cryptocurrency as a speculative asset. This is stable coins as a means of payment, and maybe it can be faster, smarter than existing means of payment. Again, I would say the use case is still not fully established, but certainly the use of stable coins within the crypto domain has certainly increased. I think it's important for India to keep abreast of these technologies, to certainly be part of the central bank digital currency movements that are happening across the world. At the Bank of International Settlements in Basel, there's a working group. There are working groups focused on this. India has to be part of that because it doesn't want to be left out. But how much it has to move and when it has to move, it can decide that. But I would say, don't ban all these activities, contain them in a way that you feel comfortable, but allow for technological progress to happen because you don't want to be left out. And there are a number of Indian entities that are actually participating in creating the infrastructure for all this. And that's a development that we should welcome. that if they're contributing to digital infrastructure across the world, that will be an asset that we can benefit from in the future. So I think it has to be more nuanced than ban or fully accept. It's a careful understanding of what we can benefit from and where Indians are actually participating in a way that creates more capabilities in this country. So I would just take a more nuanced view.
So it also means that the government should make its stance on crypto clear. And uh, is it what you're saying that also?
Well, I mean, sometimes ambiguity has its own value, but I would I would say, you know, the details matter here. And so, rather than encourage a free for all investing in cryptos without any constraint to whoever chooses to do so, which may create the kind of problems that we saw, for example, in derivative markets. I would instead say a steady understanding of where we would benefit more from, and opening up those areas, creating rules in those areas might be useful, rather than complete laissez-faire in this area. But it does require engaging with the participants, engaging with the various structures, so as to understand how we can benefit. This is not going to go away in a hurry. It may end badly. It may end, in a way that generates a whole new set of technologies that the financial sector moves towards. As even big banks are contemplating entering the digital asset area in the US. So we can't hide our head in the sand forever, but we can, as we have done in many other areas, take a much more nuanced stance. Maybe take a little bit of risk, but not too much.
All right. All right, Dr. Rajan, thank you so much for your time, and grateful to chat with you and get your insights on trade and as well as the state of economy.
Want access to Business Standards premium insights? Join our exclusive LinkedIn communities and connect with top voices in the BFSI space on topics that matter to you.